most investors are possibly feeling good about risk appetite. But we feel that this consequent rally in global markets across the world, in developed markets and Asia as a consequence, have possibly been too sharp and too soon. It kind of generates the feeling that some of the risks that could still be lurking in the background, like a delayed recovery in consumption demand, much more delayed recovery in investments, are possibly being overlooked by the investing community right now. And as a consequence, we are a little cautious about this rally that we have seen. We must also remember that as a consequence of this recent rally since the third week of March, valuations are actually back to their old peaks in June, early January rather, because earnings estimates during this period have declined about 10 to 15% across Asian markets, and in some of the Asian markets, even higher, like in Southeast Asia. So we haven't really seen any valuation correction in the market.
Yes, and Manishi, if you're saying that perhaps there could be a catalyst for a bit of a wake up call, a reality check, then, based on these valuations and some of the risk factors you put out there, do you think it would be the case that we would retest lows, or would the drop not be quite that severe?
Well, it's difficult to, sort of point out an exact number. But I would think that in the near term, there should logically be another round of correction in global and Asian equities. Um, some of the catalysts to those would be further downgrades in corporate earnings estimates. There are quite a few pockets within the Asian region where we think analysts are still too optimistic about their growth targets. It could also be triggered by a continued appreciation or continued strength of the US dollar. We are still living in a US dollar shortage scenario across emerging markets, which would obviously result in flows gravitating further out of emerging markets and further out of Asia. And finally, potentially some credit events in the financial sector, particularly in the highly leveraged pockets. So these are the risks that we have to watch out for. And I think the market is possibly not paying adequate attention to some of these risks right now.